Welcome back. You're watching Commodity Champions. Let's take a look at the currency space now. And the last week seems to have been a sea of red for several of them. With the Japanese yen falling over 3%, the euro declined more than 2% as well. And our very own Indian rupee saw a cut of 1.3% versus the US dollar. The dollar, in the meanwhile, continues to remain strong and is expected to strengthen further on the back of an expected Fed rate hike in the month of December. Meanwhile, the Trump effect seems to be wearing off, with the rally beginning to lose steam. The Trump's plans of increased infrastructure spending had sent commodity prices up, with investors hoping for a surge in demand. However, as the uncertainty over his policies continue to prevail, the investors are now slipping into what looks like a wait-and-watch mode. Joining us now to discuss this is David Lennox, analyst at Fat Profits. David, hi, good to have you. The Trump effect really seems to be wearing off the markets. The kind of gains that we saw in the previous week have turned into losses in this week.
Look, primarily we put it to a couple of things. First of all, the market's now having somewhat of a reality check. Yes, we did see that rally, and a very strong one at that, with Donald Trump basically saying that he was going to renew America's infrastructure. And I think the traders went off and did some quick sums and probably came up with a figure of something like 4 to 5 trillion US dollars for that to be done. And of course that means a lot of commodities to satisfy that type of building, and hence we saw that rally. The reality check is Trump at this stage has not even been inaugurated into the White House or into the presidency. So we have to really now wait and see what actual action comes, and that's why we've seen the market somewhat retrace. And of course, also on top of that, we've seen the fact that the US dollar has in fact gone up in value as the consideration for the next FOMC meeting on the 13th and 14th is that we will see a rate rise, and that's pushed the US dollar higher, and of course with that commodity prices lower.
David, what's your take on all of these commodity prices then? Like iron ore, coal, these commodities gained between 20 to 30% in the previous week. Do you see the prices ending around these levels at 2016, or do you see some more unwinding coming in?
Well, look, we certainly think in terms of the bulks we will see a very good finishing year, and that's primarily because China's played a big part in getting the prices of the bulks up to where they are, especially iron ore. They've imported about just over 1 billion tonnes of iron ore through 2016, and we do expect that it will be probably closer to 1.1 billion tonnes come the end of the year. So overall, that's really put, we believe, a significant amount of pressure on the iron ore price to the upside. And as for coal, the same thing. We believe China's actually curtailed domestic production and has actually looked to be importing cheaper coal from the rest of the world. We do believe, however, that domestic cutback, let's say, that we've seen is actually now being changed, and we do expect to see coal prices perhaps just retreat a little bit over the remainder of 2016.
David, zinc has gained up 60% in this year. Nickel and copper prices are trading at multi-month highs as well. How would you look at the first quarter of 2017 now? Do you see the the supply concerns and everything transfer or spill over into the new year?
We certainly still believe that zinc has got some way to go, primarily because the metal will move fully into deficit come 2017. And there's still at this point in time really no respite from fresh supply coming on stream. So we do expect that we will see the zinc price continue to be well supported. And if in fact we do see Donald Trump start to implement his renewed US infrastructure through 2017, which we would expect to see, then we would be actually quite comfortable to be looking at the broad spread of commodities from nickel to copper, both of which we think will be, especially copper, both of which we think would do very well in an environment where the US is building.
All right, David, we'll let you go at that. Thank you so much for joining us. So zinc continues to be the top pick, even now with 60% gains already in 2016. But let's shift our focus now and talk about the crude oil prices and the strength in US dollar and the rising output in US, Russia and OPEC countries has been putting pressure on the crude oil prices. The oil producers in the meanwhile are meeting in Doha today and tomorrow, and that is what the markets are looking at. Of course, in the month of November, 30th meeting of OPEC is something that an agreement to cut output also is being expected. So will 2016 end on a high note for oil? To talk about that, we have with us now Troy Vincent, who is from Clipper Data. Troy, hi, good to have you. What's your sense really? How are you watching the Doha meet, where you have many of the oil producers coming in, and Russia also is joining this meet?
Important takeaway from tomorrow's meeting is that, of course, Iran and Iraq will not be joining Saudi Arabia and others to have November 30th meeting discussions. Now, the important takeaway there is just that there is this effort by Saudi Arabia clearly to come to some type of consensus among OPEC nations and even bringing Russia into the fold there. However, with Iran and Iraq still sitting on the sidelines for tomorrow's meeting, I think that's reflective of the larger problem that will come at the end of the month, which is that, ultimately Saudi Arabia and some other Gulf nations, largely Kuwait, are going to have to step in and really take the burden of this production cut.
Troy, while the Doha meeting announcement would be much weighted, but it is the November 30th meeting that an agreement could come or not come through. If there is no agreement, where do you see prices headed then?
Well, if an agreement's not met on November 30th, I very much expect prices to retreat, with WTI likely to head back into the 30s, possibly Brent as well in the high 30s, at the very least the low 40s. I also expect that that's just going to be bearish longer term, likely shape that forward curve, just as that leads to an expectation of the supply glut remaining on through 2017. And if that's also the case, of course, it very much discredits any credibility that OPEC has at this point after very many months of talking and hyping up this agreement leading into the meeting later this month.
Your point is very well taken, Troy. Thank you so much for joining us. So that really is the takeaway from this one. If there is no agreement from OPEC on 30th of November, you could really see prices crashing from here, and $10 of a downside is not ruled out, as Troy Vincent was pointing out. But time now to strategize for the coming week, and Ravindra Rao, who is from Anand Rathi, has his strategies ready for you to trade in the next week.
So I don't see crude sustaining much, even if it rallies on short covering. I don't see it sustaining much because of the higher dollar index, and I'm expecting it might again fall towards say 43.5 kind of levels on NYMEX, and on the MCX again 3,000 levels is very much possible. So that's why I sell in the December contract for a target of say 3,040.
All right, that's how you can trade your commodities in the coming week. But that's all the time that we have in this edition of Commodity Champions. Thank you for watching.